Today's video, I'm going to take a look at the Great British Pound. As a UK resident, it pains me to say this, but the country could be facing some challenges that may weaken the pound. Let's dive in. Now, on the face of it, the pound has actually been one of the best performing currencies this year. However, signs of weaknesses are emerging which could change the outlook going forward. At Market Wake Up, we like to examine both the bullish and bearish scenarios for markets. To do this, we use multiple tools to gauge the health of an economy. One key tool is GDP, or Gross Domestic Product. This measures the total value of all goods and services produced by a country over a year, and it's a crucial indicator of economic health. Here's an analogy that I like to use. Imagine you're having a cheeky bet on the football, and to pick a winner of a game, you typically look for a team that is in the top half of the table over a team that's in the bottom half of the table. Essentially, you want to try and pick the favourite. Why? Because the teams at the top of the league often are the teams that are performing better. And it's similar with currencies, right? You'd rather favour the currency that is tied to strong economic growth rather than a currency that is showing none or slowing growth. Now, in the UK, GDP has fallen from 0.7% in Q1 of 2024 to just 0.1%. And forecasts suggest that we won't really see much growth until Q2 of 2025. Now, let's compare that to the United States, where the current GDP is 2.8%. In football terms, it's like picking Manchester City versus Southampton. You're more likely to bet on a stronger team, or in this case, the one with the stronger economy. But GDP isn't the whole story, because there are different measures of GDP, like for instance GDP per capita. So we need to introduce more economic indicators to help us gauge an economy's health. One of those can be interest rates and interest rate policies by central banks. Now, most central banks at the moment are in a cutting cycle, which means they're lowering their interest rates. Now, lower rates can be seen as bearish or negative for a country's currency, because the aim is to reduce the value of the currency to stimulate economic activity. However, not all central banks are cutting rates at the same pace. There are a few outliers, and identifying them is crucial. Let's take a look at the UK first. The central bank in the UK, or the Bank of England, has been cutting interest rates. However, with economic growth slowing, they may be influenced to cut rates further or more aggressively. This could weigh heavily on the pound. On the other hand, let's take a look at the United States. The Federal Reserve appears to be cautious about cutting interest rates, and at which the pace they do it. This is potentially influenced by the policies that Donald Trump, the new president, could be bringing in next year. Another outlier for me is Australia. The Reserve Bank of Australia, or the RBA, stands out to me because they've been holding interest rates at 4.35% since November of last year. These differences in policies can create varying pressures on currency values. Take a look at Pound Aussie. It's stuck in a range, not the cleanest one admittedly, but the recent failure to break higher suggests it could move lower if the current trend persists. Similarly, the pound US dollar has fallen sharply, dropping over 6% from its highs in September. If the current rhetoric and conditions remain unchanged, we could see pound US dollar prices heading towards the 1.23 level. Now, please remember, this is not financial advice or a trading signal. It's just my personal opinion. Always do your own research before making any kind of financial decision.